Dear viewer, welcome to our channel GVS Bank Academy. Today, I am going to discuss about Advanced Business and Financial Management CAIIB Paper 3. That is newly introduced paper in CAIIB, that is Advanced Business and Financial Management. Today I am going to discuss part 4, 2 small case studies. Small case studies. We are starting JAIIB classes from June 2023 onwards for October 2023 examinations. Already for June 2023 CAIIB examinations, revision classes are in progress. Interested members are requested to contact on this. Calculation of operating leverage. Details. Production and sales. Number of units produced and sales 25,000 units in units. Selling price per unit 1,000 rupees. 1,000 rupees per unit. Variable cost per unit 500 rupees. Per unit 500. Fixed operating cost, other fixed cost 50 lakh rupees. This is the information provided. With this information you have to calculate the operating leverage. First you have to calculate contribution. Selling price per unit 1,000 rupees minus variable cost per unit. So 1,000 minus 500, contribution is 500 rupees per unit. 500. 1,000 minus 500, 500. Total contribution is equal 25,000 into 500. Total unit 25,000 into 500 in each unit. So total contribution is 1 crore 25 lakhs. 1 crore 25 lakhs. EBIT, earnings before interest and tax. Contribution 1 crore 25 lakhs minus fixed operating cost is 50 lakhs. 1 crore 25 lakhs minus 50 lakhs. You will get EBIT 75 lakhs. Earnings before interest and tax 75 lakhs. Contribution less fixed operating cost 50 lakhs. So 75. So what is the formula for operating leverage? Operating leverage formula very important. Contribution, that is the contribution, total contribution 1 crore 25 lakhs divided by EBIT, earnings before interest and tax 75,000. 75 lakhs. So 1 crore 25 lakhs divided by 75 lakhs is equal 1.666 is the operating leverage. Very important. Contribution by EBIT. Operating leverage formula you have to remember. Contribution by EBIT. Earnings before interest and tax. This is the calculation of operating leverage. One small problem. Second problem. Operating leverage calculation and financial leverage calculation. Equity share capital 60 lakhs. 12% bonds 37 lakhs. They had issued bonds for 37 lakhs. On the 37 lakhs, rate of interest payment is 12%. So what is the interest burden on 37 lakhs? Is equal 37 lakhs into 12%. Every year interest burden is 4 lakhs 44,000. Interest 4 lakhs 44,000. Sales during the year 85 lakhs. Fixed cost excluding this interest, fixed cost is 7 lakhs. 7 lakhs. They had given profit volume ratio, PV ratio. PV ratio, profit volume ratio 28%. It means contribution by sales. How we can calculate PV ratio? Contribution by sales. It means out of sales, PV ratio 28 means out of sales contribution is 28%. 85 lakhs into 28%, that is contribution is equal to 23 lakhs 80,000 contribution. Contribution means sales minus variable cost. Contribution is equal to selling price minus variable cost. Here the variable cost they are not given. They are given PV ratio. PV ratio is nothing but out of sales, what is the contribution? Directly percentage. Here PV ratio is 28%. Sales into 28, you will get contribution. Contribution is equal to sales minus variable cost. That is it. What is the variable cost? They are not provided in the exam, in the question. So 72%. PV ratio 28% means variable cost is equivalent to 72%. That is 85 lakhs into 72%. That is 61 lakh 20,000 is the variable cost. 85 lakhs minus 61 lakh 20,000 is equal to, you will get contribution 23 lakh 80,000. That is equivalent to 28% of sales. That is PV ratio. PV ratio formula, contribution by sales into 100, you have to remember by heart. Then EBIT, contribution is 23 lakh 80,000. Earnings before interest and tax, 23 lakh 80,000 minus 7 lakhs. Fixed cost, you will get EBIT 23 lakh 80,000 minus 7 lakhs. Earnings before interest and tax is equal to 16 lakhs 80,000. 23 lakh 80,000 minus 7 lakhs. EBIT is 16 lakh 80,000. So what is the operating leverage formula? Contribution by EBIT, earnings before interest and tax. Contribution 23 lakh 80,000 divided by EBIT, earnings before interest and tax. That is 16 lakh 80,000. Now the operating leverage is 1.416. How? Contribution 23 lakh 80,000 divided by earnings before interest and tax 16 lakh 80,000, 1.416. Financial leverage, EBIT 16 lakh 80,000 minus EBT, earnings before interest, and means you have to deduct interest. 16 lakh 80,000 divided by 16 lakh 80,000 minus 4 lakh 44,000. From EBIT you have to deduct interest 4 lakhs 44,000. 16 lakh 80,000 minus 4 lakh 44,000, you will get 12 lakhs 36,000. What is the degree of financial leverage? EBIT 16 lakh 80,000 divided by EBT, EBIT minus interest. This is 1.36 is the degree of financial leverage. What are the notable points in this case? PV ratio, profit volume ratio is equal to contribution by sales into 100. It means out of sales, what is the contribution percentage? In this case, PV ratio 28% means out of sales 28% is the contribution, that is 23 lakhs 80,000. And EBIT, earnings before interest and tax, contribution minus fixed cost, you will get earnings before interest and tax. Here fixed cost you have to deduct that. Then degree of operating leverage, contribution by EBIT, financial leverage EBIT, earnings before interest and tax divided by EBT, earnings before tax means after interest. 6 lakh 80,000 minus 4 lakh 44,000, you will get 1236. So 16 lakh 80,000 divided by 12 lakh 36, 1.36. These two questions are very, very important from examination point of view, particularly advanced business and finance. Thank you very much, viewers, for extending support to our channel. Thank you very much for all.